Hello, I'm Raul Elizalde with a quick take on the markets. Why do people buy gold? Well, it has that mystical appeal that goes back thousands of years, and there is a deep psychological meaning that people normally give to gold. Although it is not the easiest thing to store safely, it is quite durable. It doesn't rust or burn, for example. Also, some have pointed out that gold always retains at least some of its value, as opposed to, say, the stock or a bond of a company that might go bankrupt. And there are times when people don't think that even cash is safe, in particular in times of inflation, so they turn to gold. These days there are some who believe inflation is inevitable and around the corner because of all the money that we have been printing, and therefore gold seems to be the asset of choice. Now, for each of the last 9 years, the average price of gold has been higher than in the previous one. In 9 years, gold went up about 16% annually after inflation. Meanwhile, the Dow Jones is actually lower now than 9 years ago, although it managed to squeeze a small return if dividends are taken into account. Now, investors have certainly paid attention to this gold rush. This month, physical gold holdings by ETFs have hit a record high. In fact, the largest gold ETF has now more than 40 million ounces of bullion, which is more than most central banks hold. One could explain this just as a function of the ease with which ETFs allow ordinary retail investors to be part of markets that used to be out of reach. After all, these days you can find ETFs that can track the price of cotton or even gasoline. Trading that kind of stuff used to be very difficult for most people, but now anyone can do it. Now, gold is not popular now just because it's easy to buy through ETFs. The amount of physical gold held by individual investors has gone through the roof. The Financial Times reports that there is a significant shortage of vault space to accommodate private holdings of gold. And according to the London Bullion Market Association, last month banks in London transferred 55% more physical gold than in the month before, which was a record increase since they started tallying these movements. And it reflects the frenetic pace at which people are buying gold. Some very large hedge funds, in fact, are reporting that their single largest holding is in gold. TV ads offering to buy people's old gold have multiplied, and the latest sign that this is getting a little bit out of hand is that the first vending machines that can dispense gold bars have been installed in the Middle East and in Las Vegas. But does it really make sense to buy gold? There is no question that if you had bought gold 9 years ago, you will have now a really nice paper gain. But if you look back just a little bit longer, gold starts to lose a little bit of its glitter. In the years right after 1971, when President Nixon ended the convertibility of money into gold, bullion prices climbed quite quickly, especially in 1979 and in 1980. That was pretty much it. After that, stocks were hands down a vastly superior investment. Sure, in the last few years, the average price of gold has gone up more than the average stock, but that does not tell us anything about the future price of gold, and making the decision to jump into it right now seems dubious, to say the least. Why? Well, to start with, gold has never paid a dividend. Its only value derives from the proposition that someone in the future will buy from you for more than what you paid. Secondly, its supposed ability to hedge inflation is quite debatable. After all, inflation in the US did not end in the 1970s, and yet gold was worth more in 1980 than in each of the next 26 years. And finally, even if gold had some ability to hedge inflation, it's by no means clear that inflation is what we need to worry about. In fact, many analysts believe that deflation is more of a problem, despite all the money that we have printed in the last couple of years, because it has had stunning little impact in heating up economic activity. This gold rush has all the markings of a bubble. When dot-com stocks were flying high in 1999, you could talk about internet IPOs with taxi drivers in Manhattan. When real estate was going through the roof in 2003 and 2004, everyone wanted a piece of it. And today you can get gold out of an ATM. There are many examples of stuff that people think from time to time to be the ticket to get rich. But as it always turns out, the only ones who benefit from a bubble are those who get in and out early. At this stage of the game, even though it could go a lot higher, the risks inherent in gold seem to me disproportionate to the promises it makes. For more information, please visit us at www.pathfinancial.net. I'm Raul Elizalde. Thanks for watching.